Welcome back to Commodity Corner. We're going to start things off a little differently. Usually we start with energy and then we run the gamut on all the commodities. We're going to start with metals this time. And the reason we're doing that is because metals have really been in focus the past week more than energy. So we're going to talk about it and we're going to see why they're moving, what's going on, what to expect, and how you could trade. As always, we're going to start in RTH. The reason being is that's where the most volume is, that's where the most liquidity is. And that's really when you should be in these things versus when you shouldn't be. I know that a lot of these commodities are open 23 hours a day, but just because something's open doesn't necessarily mean you should be there. As I like to always say, and I tell this to my guys all the time, just because your computer's on and the market is open does not mean that there's something to do. With that being said, gold has been kind of interesting when you look at what it's been doing in this, let's just say 3,300, 3330, 50 area. Like it's been really choppy. If you look at what's going on here, we're basically stuck in this zone. Make a drawing over here, just so you can see it better. To a large extent, where gold has just been stuck here. You notice that we double topped up at this, let's just say 3450 area, where we double topped. And then we're really just not doing anything. You could say to a large extent, let's just get this out for a sec. You could say to a large extent that we're sort of stuck here in this like zone. We've spent the majority of our time going back towards mid-June. We're really not going anywhere. So if you're looking for juice in gold, it's not there. And there's probably better places to be. There are probably easier places to be. Gold has been very, very hard because you're getting all these gaps. Let me just move this up a second. You're getting all these gaps and you're not really getting paid to sit. The ranges are getting very compressed and it's very hard to really predict with a certain amount of authority where it's going to go. So I just think for now, it's probably hurting people more than it's rewarding. It's pretty much like a heartbreaker. So I would be very, very careful being in here. What is actually starting to move a little bit is silver. Now, granted, silver got up to multi-year highs. Let's go to a weekly for a quick second. It hasn't been in this since going back to 2011. So we're really starting to break. We're trying to tag 2011 highs. You could see, we had highs going back to April of 2011 where we got up to almost $50. So the market is definitely breaking out. It's a clean breakout. Granted, it's complicated. It's not easy to trade it. It's a high tick value. It is a little bit more platinum-like in terms of its trading. Very fussy and it trades in like fits and starts intraday. So you definitely have to be a little bit more careful. But at the same time, it is tradable. I would keep silver on the radar because it's moving. I think if silver can take out these highs from earlier in the week, up at like 30, almost $40, could send it. I'm not saying it's going to send it. I'm just saying is the possibilities are there. The volatility is definitely picking up in silver. Platinum also, it had a beautiful run and it's now getting more difficult. It's definitely trading not as clean as it was when it was having this up here on its way to 15, what it was, a 1510 area. It was a lot easier to trade. Now it's, even though it's retracing, you could say, okay, fine, I could trade the retracements. It's not, you're not wrong. The only is that, again, it's trading very much in a fits and starts type of manner. And even on an intraday basis, we go to just an intraday for a second. Let's just go to a 15-minute per second. You could see it's sort of gappy and dying. So like on Friday, I had the gap down and then it just died. You really had kind of like this on Thursday where it was just clean, like it once was. So if you go, let's say, if we go back to, let's say, an hourly for a second, you could see like, had this move, it was clean. Had this move, it was clean. Even these moves clean. Now it's getting to a point where it's getting a lot more difficult. It is tradable, but just you got to be careful. And you definitely have to size down silver and platinum. You really have to size down on these things because if you use the time element, which is what we do in our group, you could run into situations where you're getting stopped out because of time as opposed to price. Because again, it's coming a lot more labored in terms of how they're moving. Okay, the last one we're going to go over in the metal space is going to be copper. Do that quickly. Copper going into last week after it had a major run was very, very frustrating. because it really was just doing nothing. It finally woke up a little bit and then obviously tagged and it broke above this high that we had on that spike, going back to July 8th. With the news that came out with the EU and the tariffs that just came out in the past couple of hours on Sunday, we could start seeing some news on copper tariffs coming out. So I would be very, very careful with this. I wouldn't be rushing to buy it. I wouldn't be rushing to sell it. I would take it day by day. I think it's becoming a little bit more dangerous now because tariff headlines are real. Tariff headlines are very hard to interpret, and you could get caught in a way that could hurt you really, really badly. So you just want to be really careful with it. Let's go to oil. So just for those of you that don't know, there is an OPEC meeting tomorrow, Monday, the 28th of July. There's nothing expected in that meeting. There's no expected cuts coming. There's nothing inventory wise expected. That's not expected until the August meeting. So I think it's going to be a nothing burger. However, it's still an OPEC meeting. The market could move off of it. So you have to be really on your toes and really measure twice, cut once. Don't just jump in on a headline, because a lot of times the machine will take the market in the opposite way just because of a news release, settle down within a couple of minutes, and then go in the exact opposite direction. So the best advice is, if any news comes out, wait a few minutes. Doesn't mean 1 or 2 minutes. Wait a good 10, 15 minutes. Let the market settle in. Let people digest what's going on. And then you can start seeing which direction it's going. We'll go quickly to gasoline. The interesting headline that came out this past week, where Russia was going to be minimizing its gasoline exports. You would think that would be a little bit bullish because there'd be some supply coming off the market. But gasoline didn't really move off of it. Gasoline, heating oil, they're just dead. We've talked about this ad nauseum, so I'm not going to go over it now because I don't waste your time. But they're really just dead money. So now let's go to the one that was most interesting. Natural gas. So natural gas, what happened here? So there's a couple of factors that are moving natural gas to the downside. One, the anticipated weather is not coming to fruition like was originally expected. What does that mean? The anticipation was that we were going to have a unusually warm summer across the country. That did not happen. Instead, we're getting more of a colder summer. Now, obviously, when you're in the heat, it's hot outside. You're thinking to yourself, it's not cold, it's hot. From a natural gas perspective, the weather is playing a factor in how natural gas is moving around. What does that mean? So natural gas, above any other commodity, is one of the ones that is very, very sensitive to weather. A lot of its movement is based on weather, whether it be cold, hot, hurricanes. A lot of it is affected. Weather has a big effect on how natural gas moves. So we're having across the country a more colder summer than originally anticipated. That's problem number one. Problem number two, demand. Now, what does that mean? There is an uptick in drilling in the Permian. There is definitely an uptick in drilling. However, the way that drilling is being done is not necessarily with people putting their machinery on electrical power grids and just drawing electricity. What they're actually doing is they're using generators. That's what companies are doing. These generators are huge, like massively huge. And the best way to explain it is, if you've seen on the highway, sometimes you see these big trucks that have oversized loads. These generators go on these oversized loads. That's how ginormous these generators are. So instead of drawing power from the grid, they're just bringing battery packs and using those generators. So the demand for electricity is not as great, which means the demand for natural gas is not as great. That's another factor that's playing into it. A third factor, which is something that a lot of people are not aware of, and it does make sense, is that there are physical pipelines that are showing negative prices. Huh? I know you said, what are you talking about, negative prices? Yes. There are certain physical natural gas pipelines. Specifically, there was Waha that had negative physical gas prices, which is also adding another layer of price pressure on natural gas. Now, can natural gas break $3? It's very possible that this week it may break $3. Now, the other thing is that a lot of people are sitting there going, okay, it's going down 3 spot 109. It's probably going to break $3. So you may have people who are pressing on the short side, and therefore we get a pop. That's another thing it could do. With all of this happening, natural gas is becoming very, very hard to trade, especially if you're looking to buy it and be on the long side and have a long thesis. Originally, my target was $4 to $5. Obviously, with the three items I just brought out, that case is now pretty much gone. I don't believe in the short term, there's no $4 to $5 target coming unless something drastically changes. Well, that thesis has now pretty much been shelved, and we'll see what happens come October when we start trading the winter months. But for right now, $3 looks like it's probably going to get broken, which is probably freaking a lot of people out. And a lot of people are caught because when you look out at the curves, you look out at the back months, the market is not here. The market's significantly high. The front month is not trading that way. Now, just to recap why that is, number one, you have unseasonally colder summers across the country. You have demand for power from the drilling perspective is not there because they're using more generators to get their power to run their drills. And number three, you do have physical pipelines that are right now priced in negative territory. So you have all of those three factors combined. That is what's keeping a lid on natural gas going up. Now, with this last thing I'm going to say, we'll end it, but it's very important to understand with natural gas because a lot of people, they see this and they don't really understand how to interpret it. Natural gas is the one thing on the planet that can gap 10, 12% on any given day. You can do it. So you have to be really careful with it because it can gap. And when it goes, it just goes and it'll blow everybody out of the water. So for example, the market gaps up tonight. Let's say it's 6 o'clock. The market gaps up here. Let's say, I don't know. Let's assume that this high is 3 spot 176. Let's say the market gets to 3 spot 81 or 3 spot 180, sorry, then all these people who are pressing down, they're all wrong. That could push the market up. Now, are we going back up to 360? Again, a lot of things need to change in order for that to happen. Can it happen? Obviously, anything can happen, but natural gas in general is referred to as the widowmaker. It's called that for a reason. So you have to be really careful. But we have the three cases as to why you have this price pressure. Maybe we'll see if they can this week get it a green week and get a little bit of some price pressure relieved, and then we can see where it goes from there. But for now, that $4 to $5 price target is basically shelved. We ultimately could see these lows going back to April. April lows are going back to 2 spot 858. We could see that. We could even get as low as 2 spot 60. It's very possible if nothing else changes. How we get there is a different story, but we could get there. So just be careful, be smart, and I'll see you in the next one. Take care.